Hello everyone, this is Tuesday, January 20th, and our backtest also is going to be on gold. I know most of the backtests lately have been on gold, and it's not like nothing is happening on Nasdaq or on the Forex pair, not like nothing is happening on US 100, that's the Nasdaq CFD or the Forex pair, just that gold tends to be smoother at the moment, maybe for me. Okay, because there are others trading Nasdaq, who do backtest on Nasdaq and the rest on forex pairs, Euro USD and US, you understand? But gold tends to be smoother. Okay, for me, for my kind of person, my kind of trader. So that's why I've been focused on gold for a while now. So, but I hope the I hope everything falls in place where I want it to be. So I can go back to US 100. I can also do some backtests on US 100 and maybe some few forex pairs. Okay, so we'll be talking on the ICT 2022 model. That's what the backtest is based on. And let's go to 15-minute time frame. So these lows are smooth. These lows were created on Monday, January 19th. January 19th. January 19th, sorry. Our focus is for today, January 20th. So I'll demarcate it with the line. Okay. Alright. Okay, I think this will be more visible at the 5-minute time frame. See these lows right here. This one, and this one. This is the low of this candle. Look at this top of the screen, the top left of the screen. You see open, the O represents open, H represents high, L represents low, and C represents close. Okay. Now look at the low of the candle. That's 4721 points. Sorry, 4721.315. Okay. Look at the low of this candle. 4721.640, which means this one is lower than this, right? And these are relative equal lows. See, when you see price trading below them to reverse up. Okay, now there's something I said about a currency that's a pair or a currency that is at its all-time high. Okay, gold currently is at its all-time high. When a pair is at its all-time high, you always anticipate the next candle to be bullish. That's the safest way to trade it. You anticipate the next candle for the next day to be bullish, like your bias for each day to be bullish until there's a kind of sudden drop in price that will indicate, okay, the the bullishness for this pair or for this currency has stopped. Okay, but until then, you always anticipate bullishness in price. But until then, you always anticipate bullishness in price. Okay, your buyers should be bullish. Like this was Monday. Okay, so me anticipating Tuesday, I should anticipate that Tuesday's candle should be bullish. Okay, that Tuesday will be bullish. So which means what for my smaller time frame, I'll be expecting a buy trade. Okay, just like this that is being displayed right here. So now you see price trading below these relative equal lows. Set side liquidity. Bottom left. Okay, and rallying up. Now we are going to discuss this briefly. Now, these sell sides, okay, I think the 5 minutes is more visible. Okay, now these sell sides were created during the London session. Okay, during the London session, I think during the London Q zone. Okay, London key zone is from 2 a.m. to 5. Okay, this is the key zone for London. For London session, this is the time you hunt a trade during the London session. Okay, this is the key zone for it. All right. So the lows were created. This one was created during the key zone, and this one was created after the key zone of the London session. And price rallied below the lows at what time? Prior to 8:30. This is the 8:30 candle. Okay. So prior to 8:30, that was about 8:20. Price rallied, took out the sell side right here. Okay, and rallied up. Now you can see, and also this is the Tuesday's fair value gap. Tuesday's first presented fair value gap. Okay, it's gotten after the market open. So the market open is 9:30 a.m. And also, before going on with this, if you are new, you should set your chart to your time zone. You should set your time zone to New York. Okay, set your time zone to New York to follow up with whatever I'm going to be talking about here. Okay, if not, it won't tally with your chart at all. Okay, so market open is 9:30, and the first presented fair value gap that is formed after 9:30 is normally is very significant in price, because price tends to use that level to while rallying up or rallying down. Okay, and price tends to respect that level as well. So you see, this is 9:30. Now this is the first fair value gap created, and you can see I extended it down. Why? Because there's a volume imbalance, very small. It's very small. Okay, there's a volume imbalance below, so you have to give a space for the volume imbalance. Okay, you have to accommodate the volume imbalance as well. Volume imbalance. The volume imbalance is a space, is a gap between the body of two different candles. Okay, see this gap between this body. The wicks can overlap, but as long as there's a gap between the body of two different candles, that's a volume imbalance. Okay, unlike a fair value gap. This is a fair value gap right here. The low of this candle and the high of this candle. But I had to extend the Tuesday fair value gap to accommodate the volume imbalance. That's how you draw it correctly. So down to business. Let's go to the 15-minute time frame. After price took out sell side liquidity prior to 8:30, it rallied up. Okay, with displacement. See this rally up. This is a very strong rally up. Okay, rallied up with displacement and left what's open. It left the fair value gap open. Where's the fair value gap? This is the fair value gap. You see the eye of this candle right here at 8:15. Okay, let me remove this. The eye of this candle at 8:15. The eye of it. This candle, this is 8:15. The eye of this candle and the low of this candle. Okay, at 8:45. That's where your fair value gap lies. Okay, so this is the fair value gap formed at the 15 minutes, is more visible at the 15-minute time frame. Okay, so sometimes it will be more visible at the 5-minute time frame, sometimes maybe at the 1-minute time frame. But I guess for those that are new to this and are still practicing, I think the 15-minute time frame and 5-minute time frame is better for you to find this type of setup. Okay, now you see the 5-minute time frame, the fair value that created was very small. You can't really see it clearly. If you zoom out. Okay, you can't really see it clearly until you zoom in. That's when you see the fair value gap. This is the fair value gap. It's very small. This is it. This is the 5-minute fair value gap. that's colored with orange. Okay, now this is a 15 minutes fair value gap. You can see it clearly. And price rallied down to the 15 minutes. Sorry, what am I saying? Price rallied down to the fair value gap created after this strong displacement up, this strong rally up, this strong movement up. Price finally rallied down into the fair value gap. And also, if you notice, this is also an order block. This is an order block. Okay, so the fair value gap is paired with an order block. You see this black, these two black consecutive candles. Okay, and you see when this green candles trades above the open of each of them, it trades above the open of this candle and it trades above the open of this candle, which validates it as an order block. An order block is a change in state of delivery. So these two black consecutive candles is sell side delivery being offered, and these green candles right here are buy side delivery offered. So when the green candle trades above and closes above the open of and closes above the open, it validates it as another block. So this is another block also, another confirmation for entry. I'll name it OB, other block. Let me put it in a spot where you can see. Okay, let me see. Now price is running down to fair value gap and other block. Okay. Now there's something I want you to see. Now remember I discussed about the ICT silver bullets, and I said it's a time-based setup that happens in a 1 hour time window. Okay, so at this time window, at this 1 hour time window, that's when price will start running. Price starts running to liquidity. Okay, and for the New York AM session, this is actually the New York AM session. Okay, this is the New York AM session. For the New York AM session, the silver bullet is from 10 a.m. 10 a.m. to 11. Okay, 10 a.m. to 11. Now you see, at this time window, that was when, if you watch closely, at this time window, that's when price starts running down to the fair value gap. You can see it here. At the time window, this is 10, this is 11. So at this time window, this is when price starts running down to the fair value gap and also to the other block. And at this time window, that's the same time. That's the same time price starts rallying up as well. Okay, to take out what? Buy side liquidity. Where is buy side? This is buy side. See this high price has created after this rally up and coming down. This is the buy side. So there is actually buy stops resting above price here. Okay, so this is buy side liquidity. So why are they buy side at the top of this high? Okay, they are buy side because there will be traders who will be willing to buy at this when there is a breakout, okay, of this high. So you being a seller here at this point, sorry, you you being a buyer at this point right here, you take your profits. Simultaneously, you are selling to those buyers who are willing to buy at this point. Okay, so you are buying at a discount, yeah, and selling to willing buyers who are willing to buy at this breakout right here. Okay, so a trade like this will look something like this. Okay, let's say you buy at this point, your stop loss at the low of this candle, and your take profits at this high. Okay, now this is about 2.11 weeks to reward ratio. That's a good trade. That's a good trade. On the 5 minute time frame, there are so many opportunities to go in case you miss the move right here. Okay, now okay, on the 5 minutes, you can also spot an order block. This is an order block. See this black candle, this bearish down close candle, followed by this up close candle. Okay, this is an order block as well. I won't have to label it, but let me just draw the line so you see it. Okay, and price also trade into the 5 minute order block. And also, why price was rallying up at the ICT key zone, that's ICT silver bullet time window, 1 hour time window, that's 10 to 11 a.m. Okay, you can see this movement up. See this black candle, this down close candle paired with this up close candles. This is also an order block. Okay, now so price has traded into the order block, rallied up again. See this down close candle paired with this up close candles. This is also an order block. So you see how price respects the other block while rallying up. Okay, and also there's a small fair value gap right here, the eye of this candle. Let me move the eye of this candle at 11:05, and the low of this candle at 11:20. No, sorry, the eye of this candle at 11:05 and the low of this candle at 11:15. So this is the fair value gap. Okay, and you see how price traded into this other block, same time trading into the fair value gap. Okay, and let me bring out the midpoint of this fair value gap. You can see how price respects the midpoints of the fair value gap. The bodies of the candle are above the midpoints. Okay, only the wick was able to go through the fair value gap, but the bodies of the candle respecting the midpoint shows that price is really bullish. Okay, so I hope you found this insightful, and I will encourage you to do your back test as well. Okay, for any pair you're trading, okay, or any pair you find interesting. Okay, do your own back tests on different pairs. Also, if you are interested in the ICT 2022 model, okay, you can also study gold as well, just like I did. Annotate your charts, okay, annotate your chart, try to find the fair value gap by yourself, try to draw the sell side and buy side liquidities, okay, all by yourself, try to annotate it by yourself. This is how you learn it properly. Okay, this is how you learn properly. And once you start doing that, you see you you become better, okay, at reading price and at seeing the setup clearly. Okay, so if you found some value in this, drop a like, subscribe, and talk later, and God bless.